Hello everyone, welcome back to our channel, the E Square Expertise. Our today's topic is the circular flow of income, which is an economic model. What is an economic model? An economic model is abstract, which represents the economy. An economic model is basically a simplified description of reality, which is designed to build hypotheses about economic behavior that can basically be tested. After the meanings, let us move on to the circular flow in an economy. The circular flow of income is explained by considering simple economy in which we have two sectors, that is the household and the firm. The circular flow is explained with the help of the following assumptions. Let us move on and see what are the assumptions of the model. The first assumption says the economy has two sectors, the household and the firms. Then production takes place only in the firms. Households spend their entire income on goods and services. We also take into consideration that there is absence of government operations, there is absence of international economic relation, and at the same time in this model there is absence of saving and investment. Let us now move on and see what are the terms of the model. Now, the first term in the model is household. Let us see what is the importance of household in this model. They are the owners of factors of production. That is, they are having the factors like land, labor, capital, and entrepreneur. Okay, these are the common people like you, me, who are not big rich producers. We are actually the people who possess land, who have labor, who have capital, and who have some entrepreneur qualities. Okay, then these are all factors of production, and these factors of production receive what? They receive rent, wages, interest, and profit. Households receive this rent, wages, interest, and profit only because they are giving their factors of production, that is, land, labor, capital, and entrepreneur, to the firms. And that is the reason they get all of these four as the source of income to the factors of production that they have given to the firm. Let's move on to the next term, that is the firms. What are firms basically? They are nothing but manufacturing units. They use all these four factors of production. They produce goods and services, and then they sell these goods and services in the market to earn an income. So, simplistically, it is nothing but firm take the factors of production from household. They produce goods and services using the factors of production given by the households, and then they sell that and earn an income. So now let us move on to the next term, that is distribution. Let us see what is the role of distribution in this model. What is actually distribution that is taking place? So here supply of factor of production is done by households. As I have told that land, labor, capital and entrepreneur जो है is being possessed by whom? It has been possessed by the households, and demand of factors of production is done by the firms. At the same time, this both how much is the demand and how much is the supply is basically determining the price of factors of production. Factor price are in the form of rent, wages, interest and profit. As I have already told, it is paid by the firms to the household. This payment is called as distribution of money. When the firms are giving payments in the form of rent, wages, interest and profit, it is nothing but distribution of money. The next is exchange. Here the firms sell their production to household in the goods market. Whatever the firms are producing, they are selling in the goods market. Factor income earned by the household is spent in the commodity market by the household for their required consumption. Now, say simplistically, it can be explained as whatever the firms are producing. Okay, they are selling that in the goods market because they produce goods basically, and the household, whatever income they earn by giving their land, labor, capital, and entrepreneur to the firms, they use that money for consumption purpose. They spend that income for consumption. This is how the exchange takes place. Let us now move on to the next term, that is circular flow. The entire model, the entire operation that we have studied till now, it is taking place between household and the firms, and this entire process, the process of exchange or the process of distribution, is done in a circular manner, and that is the reason we call this model a circular flow of income. When we will study the diagram, you will have a better idea. Let us move on to the next term, that is money flow. Let us see how the money is flowing. There are two types of money flow here. Firstly, when the payment is made by households for goods and services in the goods market. That is the first one. And secondly, when the payment is made by the firms, that is, the firms pay the price to the household for the factor of production. That is what we call as the money flow. Simply, it is nothing but the money is flowing two times. When the payment is made by households, it is a money flow. When the payment is made by the firms, also, it is a money flow. Okay, the last term, that is goods and real flow. Here there are two flows. Let us see factors of production when it is supplied by household to the firms in the factor market, and when the goods are supplied by the firms to the household in the commodity market, it is goods flow. It is nothing but whenever the factors of production are supplied, it is a flow of goods. Whenever the commodities are supplied, it is a goods flow. Now, the real flow. Real flow is nothing but the money flow. Whenever the factor of production that is used by the firms, whenever the firms are paying for it, that is the rent, wages, profit, whatever it is, that is the real flow. That is where the money is flowing actually. And when the firms, whatever they produce, whenever they are selling that to the households, and households are purchasing it by giving money, that is what we call the real flow. So here we have studies the goods flow and the real flow. These are all the terms that we are going to see in this model. As now you have a better understanding of these terms, let us move on to the model. Now let us look at the second half of the model. Here we can see that the households are providing land, labor, capital, and entrepreneur to the firms, that is seen in the green, and in return the firms are paying wages, rent, interest, and profit to the households. This all takes place in the factor market, where the households are providing the factors of production, and the firms in turn is paying in the form of wages, rent, profit, and interest. Now look at the upper half of the diagram, where we can see that the firms are providing goods and services to the households. See carefully, the green arrow is moving from the firms towards the household, indicating that the firms are producing goods and services and they are giving that to the households. And to buy those goods and services, what the households are doing is they are spending their income that they have earned by giving their factors of production to the firms. Here also notice one thing, that both the green arrows, that is when the firms are selling goods and services to household, and when the households are selling land, labor, capital and entrepreneur to the firms, it is the flow of goods. And both the red arrows show the flow of money, that is the real flow. When the households are buying what the firms have produced, they are spending their income, and when the firms are paying to the households, that is the wages, rent, profit and interest for their factor of production, it is also the real flow where the money is flowing. Okay, with this we come to the conclusion. As the income is being circulated in the economy, this model is called as circular flow of income. It is a model not because it actually physically exists, but because it is an abstract representation of a very important aspect in the economy. You know that economy is always working with the income, and so this important aspect of how the income is being circulated in the economy is actually explained with this model. With this we come to the end of our topic. I hope you people have understood the topic. If you have any doubt or queries, please write down in the comment section below, and you can also reach us to our mail ID for written notes. Do not forget to like, share, and subscribe to our channel for more such informative videos. Thank you.